Hey everybody, this is James once again from the Wall Street Minute, standing right in front of the Federal Reserve. Well, we know this week that all eyes were on Jackson Hole, Wyoming, waiting for the Fed speak. In other words, people wanted to hear what Chairman Powell would have to say about the sort of the inflation forecast more than anything, but perhaps the forecast for the entire economy. I would say he gave what I expected. He said inflation is still too high, which means we can probably expect a few more interest rate increases in the near future. I think a lot of Wall Street people have been fantasizing that somehow we were going to run the interest rates up and then turn right around and lower them back down again. Those days are gone forever. I think you're even if rates start to go lower, they're not going to go back to that zero interest rate policy again, and they really shouldn't. Why am I so against it? Well, for one, zero interest rates imply there is no risk in the economy. And what does that mean? That means, for example, if you have a good credit rating, you can often borrow money at a lower rate than if you have a bad credit rating. Why is that? Because if you have a bad credit rating, you're higher risk and you have to pay more to get your hands on the money. The same thing goes with the economy as a whole. What is my concerns is that zero interest rates policy often it creates a misallocation of capital, and capital gets applied to projects that otherwise would probably be considered, to steal a term, sketchy, a little sketchy. So anyway, in this era of slowly moving higher interest rates, we're now readjusting to a more normalized yield curve and a normalized interest rate picture, along with perhaps restoring the risk paradigm in the economy, so money will be better allocated for more productive projects. Anyway, this is James once again from the Wall Street Minute, standing in front of the New York Fed on this very rainy Friday. Say hello, leave comments, and of course, subscribe to these videos.